Hello, everyone. First little sound check. Donna, Andrea, can you hear me?
Yep.
Beautiful. Welcome, everybody, to our association leadership series, episode 9, season 3. I can't believe it is third season already. This all kind of came out of our goal of helping through the COVID process, and it's turned into a really great way to share information and bring expertise to our industry. My name is James Donnelly, founder and CEO of the Cass Group, and I am very, very fortunate to have two returning stars, Donna DiMaggio-Berger, shareholder at Becker. Donna, welcome.
Thanks, James.
And returning, I think, it's been over a year, Andrea Northrup, who's a vice president of Insurance of America and also an attorney. So I'm clearly outgunned here today by many metrics. I just want to kind of go over briefly the format. Of course, we did receive all of the questions you submitted with your registration, but we do find that you're chatting in the questions is a great way for me to kind of redirect them to Donna and Andrea. And we have Kara here in the room, kind of grouping those together in common questions so we can move forward. Reminder, we're not giving legal advice or insurance advice specifically. It's a conversation today. If you want either of those, you'll have to call your attorney or your insurance agent directly. I also want to mention, we're talking today about hurricanes and the insurance market. And as much as it is, both of our guests today are from Florida, a lot of the hurricane preparation and insurance preparation is the same in Florida and in Texas. So I think highly relevant. If you have any questions that you want to answer that go beyond the scope of this webinar, just email info@cassgroup.com and we'll have someone respond. And then several of you in your question said, James, do you have links? Well, you didn't say James, but Castle, do you have links? So if you go to our website, there's two ways to get to our hurricane resources. One, in the upper left corner is something called Resident Center. And you can click on that and click on the hurricane guide links, or go to our webinars and we put the links in there as well. So everything you need to know, all the resources across the states are there. So today we're going to talk about hurricane preparation because it's time. And we really we're excited that Andrew could make it today because a lot's happening in the insurance market. And of course, it's very related to hurricanes. We don't need insurance anytime more than when hurricane season is upon us. And then we'll do our normal Q&A. But I know, Donna and Andrea, that we have next week on Monday, a special legislative session called by our legislature in Tallahassee to address the insurance market. And I know a lot of our audience would be curious, why would they do that? We just finished our legislative session. Thoughts on, why we're having special session and maybe some of the outcomes that may come out of it. So Donna, why don't you take that one first?
Well, I think the legislature, they heard from their constituents. I think, frankly, that their inboxes were overflowing, that their phones were blowing up as our association clients got sticker shock when they opened their renewals and they saw that their premiums were going up 50, 60, sometimes in excess of 70%, and often with less than a week to bind coverage. So I suspect that a lot of it is due to public pressure, as there should be. And with this upcoming session, I think it's a good opportunity to continue for the people listening to this webinar today, James, to continue outreach to the legislature and tell them exactly what they need. It helps to focus them. I'm sure they're going to be looking at a couple different things, not necessarily what we need them to be looking at, which is affordability and more options in Florida's insurance market.
Andrea, I think that's probably exactly what they're trying to do. And obviously insurance is a function of many things, but one of the big ones is the amount they're having to pay on these claims. And I believe they want to kind of take a closer look at, are these claims legitimate? Is there any way of reducing the cost of these claims? Because if they can do that, they can reduce the cost of insurance to our associations. Andrea, thoughts?
Well, you're correct from the perspective that that's the approach that they're taking. There's a lot of discussion about special session to address litigation issues, if there's reform that can be put into place, if that's going to have an effect ultimately on where we are, and then how long it would take to see some sort of relief in the marketplace if that is the issue. There's also a representative that's interested more so in creating legislation to see how we got where we are, to understand so we can prevent it from happening again. But to Donna's point, I think the majority of people, they just are seeking relief. These price increases are not sustainable in the marketplace.
Not only not sustainable, we were talking in preparation for this webinar yesterday about we haven't budgeted even necessarily. I know we budgeted increases in insurance, but these are for the most part even beyond what we estimated that 2022 rates would be. So that will be a factor depending on the financial situation of the association. Okay, well, I want to jump right in here to hurricane prep, and for a reminder for returning guests, and we do polls, and it helps us help you. It helps us shape our comments, but we share the results. So I think a lot of you will find it interesting what your fellow board members are experiencing. So let's start with poll question 1. Really, we're just trying to figure out how ready you are for the hurricane season, which starts on June 1. So does your community have a written hurricane disaster recovery plan in place? Donna, what, obviously it's recommended and most communities do, but from a legal perspective, how important is it that our associations have a written plan on how they're going to prepare and recover from a hurricane?
Writing it down makes it more likely, James, that people are going to understand, specifically the board members are going to understand it and follow it. You know, once upon a time, the act, the Condominium Act, actually required a written emergency plan. Don't know what happened. Years ago, that was taken out of the statute, but there was a reason for that requirement, which is you need to plan. We have a 6-month hurricane season in Florida. It's right around the corner. Starts June 1st. The peak is September 10th. The most active months tend to be September and October. But, you know, we've been distracted. You know, as you mentioned, we were all on this talking about COVID 2 years ago. So we've been a little distracted, had a lot on our minds lately. And I don't know when the last time most associations have actually dusted off their emergency plan and sat down and said, okay, who's going to do what on this plan? Who's going to take the date stamped photographs and video of our amenities and our property? Who's going to take out the insurance policy and get with our agent and talk about what kind of coverage we have, you know, what kind of deductibles we have, who's going to make sure we have an updated contact list for all of our residents, who's going to identify for us the most vulnerable residents in the event of a mandatory evacuation. And that's why a written plan really does help.
Yeah, and in fact, I'm going to hit on a couple of those comments specifically, Donna. We were talking about it internally. Every May we do our CERT, our Castle Emergency Response Team training, and we've just had it last week. Yeah. And it's incredible. It's just like a muscle atrophies if you don't use it. I worry right now. I mean, depending on where you are in Florida or Texas, a lot of us haven't had a storm in a long time, and you know we tend to forget. From an insurance perspective, how important is a written plan, Andrea?
I think a written plan can be critical in the defense of a potential claim as it comes down the road, so that if you've got a checklist there and the board can go down and say, you know, we did A through E. My forever line is from the insurance side, we're looking at your suability and not your liability. So we know that you're going to be brought into the claim. So the question is, can you establish what your duty was and how you met it? So I think that's very important. So we'd love to see them have a plan. And to Donna's point, you know, the ins and out of understanding how your deductibles are going to apply is going to be critical when that storm hits, and understanding whether or not you're going to have minor damage and it's something to resolve quickly, or major damage and you've exceeded your deductible and it's time to bring everyone in.
It's really all about risk mitigation. You commented me before, Andrea, if there's a claim, it's not if there's going to be litigation, there's going to be litigation. It's Correct. Going to be how prepared are you for that. I'll tell you a couple thoughts from the management perspective. Firstly, you have to have a plan. 2, I really find checklists are highly effective. I mean, less words, more checklists, more specific, you know, time sensitive. things that you must do depending on the time away from the storm. And the other thing is a dry run, like we just did here at Castle last week. I really encourage all the communities to get their manager and whoever's responsible. Sometimes you're self-managed, so it could be the board, or sometimes you'll have an emergency response committee. But walk through it, even as specific as you have a new maintenance supervisor who's never actually put up shutters or whatever your protocol is in your community. So, you know, it doesn't mean you have to go all through the dry run, but walk through it so that when it happens, you're not going, oh, where's the nuts that go on these bolts kind of thing. Okay, the other thing I have really found, and we've had a couple of very specific historic experiences at Castle that have made us sensitive to this, is knowing who's in the community. You know, we've had situations before where we've got high rise, you've got someone on a higher floor, there's no power, and the association didn't know that person was there. So Donna, I'm gonna turn back to you. First of all, I think it's a best practice to know, but in terms of liability, you know, what is the association's responsibility for who's there, who's not, and what happens after the storm?
Well, to Andrea's point, suability comes into play. You know, anybody can be sued as long as you can find an attorney willing to take the case. So if the association does no due diligence in the advance of a storm, and let's say there are, you know, at least one resident who is a vulnerable resident who is basically a shut-in, they haven't identified that person, and something happens to that person as a result of the storm, I think it's a pretty fair bet that the association will be sued for that. Whether or not there's liability is going to depend on a number of things. Now, in Florida, when the governor declares a state of emergency in advance of a named storm, let's say, if there's a mandatory evacuation order, the emergency powers language in the 3 shared ownership statutes clearly states that if somebody stays in the event of a mandatory evacuation order, the association is, and I quote, immune from liability. So you do have that, and the legislature passed that because they were aware that years ago, people just refused to leave their homes, and what is the association going to do? But this really boils down, James, to communicating with your residents. And that's part of that plan. Let your people know in advance, not the day of the storm, but now, June 1st, and do it every month during our 6-month hurricane season, because remember, you have new people moving in to these communities. Remind people what to expect if a hurricane is approaching. You know, this is when our employees will leave. If you've got front desk staff and valet, this is when we anticipate they will return. If we are under a mandatory evacuation order, your board members will leave. Everybody else will leave. Essential services will be shut down. We don't recommend that you stay. In fact, you're under order to leave. However, if you do leave, you may be trapped, and you know, no one can get to you. So you have to put that out there. You have to communicate the risks to your members.
You know, I'm going to have to see how we jump around here because I have a whole section on communication, and I think I'm going to come back to it because it's so important. I do want to share the results of our poll, and so we have some hurricane plans to do out in our audience. So good on those people who have, and people who don't know, that's understandable. And the no's, we need to get those plans in place. But yeah, I think the knowing who's in the community, and I know, even though if there is immunity, there's also just a practical level, is you will have people refuse. We always do, and you know, there's the human side of it. Is, you know, we know they're up there, and we'll do everything we can. But I think, again, back to communication, just be able to communicate. People, please don't. If there's an evacuation order.
Not every association, James, has the benefit of having professional management and employees. So the question is, let's say you have a vulnerable person. Does that mean that the board has to go to the home and actually physically remove that person? You know, these are questions when you're a self-managed community. Who is going to, this is where the emergency contacts come into play, perhaps, to contact those people and let them know that the vulnerable individual needs help evacuating the building.
The way you've reminded me, most of the evacuations are on the barrier islands of the states. And what they'll do is they'll raise those bridges, and they won't go back down until after the storm, and they will only let certain people back on. So one of the things on our checklist is to make sure our property managers who manage barrier communities get the card from the municipality that lets them get back on that island. And a lot of newer managers, or maybe there's been a change in management or self-managed, they're not aware of that, and they literally can't get back to the property. So that's a practical tip. I want to keep talking about preparation and there's questions that came in. What repairs do we need to do? Or we're in the middle of a project. What should we be doing? And even one more was, our neighboring buildings got construction. How can we deal with that? So I will, Andrea, what are the obligations of the community from an insurance perspective in terms of hardening or getting the community ready for a storm?
At the end of the day, every contract is going to be, or every policy is going to be its own contract. So you're going to have individual carriers are going to have different requirements. But what's really important to highlight is that the insurance itself designates the covered perils that the damage has to be caused by. And so when you read most policies, they're going to say, the building itself has to be damaged to allow the wind in, the water in, the rain in. If the building was just exposed because it was opened up for windows to be redone, or the roof was halfway completed, and then the water or the wind do damage on the inside, there's potential for that not to be covered. So associations that are mid-project need to be looking at to see if they've got a builder's risk policy in place. Their policy may have language as it relates to what's called course of construction. So they might have a sublimit of coverage that's going to be built into there. They want to do their absolute best to remove whatever they can from the building, if you've got cranes on site or different equipment, and then shore up as best they can whatever is open with as much advance notice as they can possibly. The neighboring buildings, that one's going to be a little bit harder if they've got a crane you can't control. The risk manager of me says, go out, take pictures, take videos, show where it is versus, where it might be in a couple days. Because if the wind blows that crane into your building and then that's wind damage, you've got your policy, but then you might have some potential liability issues down the road.
And James, there's a different set of concerns if they haven't even started the project yet. So Andrea's addressed the mid-project concerns. What if there's outstanding repair projects that haven't even been commenced yet, and they have a claim? A lot of times insurance companies will say pre-existing, they'll deny a claim based on pre-existing damage or failure to maintain.
Well, Donna, you and I talked about this yesterday. We know we have a project, hurricane season's upon us. Do we or don't we start? And we're in May, and normally the storm season tends to be later in the season than early, and that doesn't mean there can't be a storm anytime, but it is a judgment call. Do we go with that project now or don't we? But Donna, you had a couple comments on maybe you should. That may be a better strategy.
Well, I think the board should never substitute its judgment for the judgment of its engineer. So it's crucial that your engineer be the one guiding the board, and especially if you're talking about life safety issues. If you're in the midst of a 40-year certification or 50-year certification, or you've just called an engineer out because you want to have a structural report done, the association is duty bound, the board is duty bound to follow the recommendations of that engineer. So trying to, figure out what to do in terms of hurricane season, first and foremost, life safety is the goal. So you must be dealing with the engineer, and certainly any board, I would caution them strongly against substituting their own judgment, particularly if that judgment is based on monetary concerns. You got to follow what your engineer is saying and get those repairs done expeditiously when the engineer tells you you have to.
I'm just going to, I've been reminded here, I missed a poll question too, and that was, I'll put that up, Mariness, now. I really think we wanted to reinforce the importance of knowing who's in the building or not in the building, who's the resident, not necessarily the owner, and having all of that information. So the question is, does your community have an up-to-date contact information for all owners and residents? So while that's going on, this is interesting as we get into projects. It brings up the topic of vendors. And several of the questions that came in were, should we be contracting or pre-negotiating with certain vendors ahead of the storm or not? So Donna, why don't you start with that one?
I say absolutely. I have a strong recommendation that you do get with your vendors, particularly certain types of vendors. For instance, your landscaper. You know, in a lot of our HOAs, they've got a lot of plant material along the streets and the roadways, that if a storm comes in and knocks them out, you're going to need that debris removed almost immediately, you know, in terms of ingress and egress to the community. So why not talk to your landscaper ahead of time and say, hey, how quickly can you get out to us? What's it going to cost? The same thing with your managers. You should know when in your front desk, in your valet, and all the people serving the community, what can you expect in the event of a storm? What's it going to cost? When are they going to leave? When are they going to come back? Certainly knowing who your adjuster is. And I think we're going to talk about that later, James. But if you've never thought about getting your own independent public adjuster, or at least having a name, now's the time to have one in your back pocket. Because if you do have a claim, that's one of the first people you're going to want to contact.
I agree. In fact, especially now, obviously the communities that have relationships and contracts with the vendor are going to be prioritized at those that don't. Andrea, is there an insurance implication of vendor contracting?
I strongly recommend it because one, you don't want to be, at the mercy of the person for whatever their contract terms are going to look like, to get them in there immediately. You don't want to be negotiating those prices for those terms, and you don't want to sign something you don't know what's in it. So, we've talked in the past about assignment of benefits and the issue that this has created within the insurance world, and we're now seeing variations of language that's not called an assignment of benefits, but it's basically operating in the same capacity. If you've got that contract in your hand, you know what the pricing is going to look like, and you can get it over to your attorney in advance to review, negotiate, respond, and come back so that it's signed and ready to go day one of the emergency, your association is going to be in a lot better position than an association that's signing it to get them in right after the storm or within 24 hours, because they're just going to sign whatever it says and learn about it later when something goes south.
Yeah, and we've had a lot of questions about this from the management side as well. James, how do you sign a contract? You don't know what really the scope is, and especially landscaping, which is often one of the keys to get people in and out of the community. You can actually get a fairly accurate per unit, per tree, per ton, per different variables. So, Marinus, two things. I want you to share poll 2 and put up poll question 3, which is about vendors. So on question 2, it looks like we're doing pretty good on getting our information up to date. We're timely. It's May 18th today. So for those no's in there, we have 13 days to get this list up to date before the hurricane season starts.
James, can I just add on that contact? In addition to knowing the emergency contacts, I often recommend that owners let us know who should have access to the unit, because sometimes people leave the state altogether and then somebody or relative shows up and they're demanding access to the unit, saying that the unit owner has authorized them. It's helpful to have that authorization for unit entry as well.
It really is. In fact, Don, it leads to another question I had later, but it's timely now, is I live in a condo or I guess an HOA, and I have a snowbird who's not there, and or they are there and they simply aren't preparing their unit or their home for a storm, which could cause risk to the community. What rights does the board have, does the association have, to go and take the steps necessary to mitigate risk?
We'd look at the documents first, James, to see if the board has what we call a self-help provision. So if there's language in the documents that says if the owner's not taking certain steps to secure the unit, the association can go in and can take those steps and then even specially assess those owners for those costs. But that authority has to be found in the documents. Now, I do, for a lot of my clients, what I call an absentee unit owner policy, which is if you're going to be gone for any length of time, let's say more than 2 weeks consecutively, you have certain obligations as an owner. That includes shutting off the water to your unit, letting us know who's a local caretaker, who can we contact in the advance of a storm to say, come over, you need to remove everything off this balcony. If they've got shutters, instead of impact glass. You've got to, you've got to put shutters in place, those type of things. It does create a baseline for establishing negligence in the event that if we have such a policy and an owner violates it.
So Donna, I think one takeaway there is you better check your docs to make sure you do have the authority to do that. And Andrea, what would be the implications of not? So I'm an association, I have the authority to self-help. I don't. What are the insurance implications of that?
So a lot of that's going to depend on their specific property carrier. If their property form has a protective safeguard endorsement, which requires these shutters to be put up and, fully protecting the building because that's how it was underwritten, then they absolutely want to take advantage of that self-help so that they can stay in compliance with their underwriting requirements. If it's a policy where, they received credit for having shutters and then they them up and they suffer a major loss, based upon whatever carrier it may be, there may be a bill, if you will, a loss of credit, which would add to the premium. So it's going to be on a per policy basis, but it's definitely something you'd rather know in advance and make your decision than not make the right decision and find out when you either have no coverage or it's significantly less than you were expecting.
Interesting.
And construction projects, I'm sorry, James, but construction projects are ongoing in our homeowners associations where you may have those waste receptacles sitting in the driveway. This is where you want a holistic approach, thinking, okay, but if we've got a storm coming, that waste receptacles going to need to be secured, emptied out, construction materials secured. And this is true even in multifamily buildings. Sometimes contractors will use the limited common element balconies as a staging for certain unit renovations.
I had a question come in on the owner's update. How do we as owners update who should have access to the units? I mean, I can answer that. When most property management softwares have, obviously they have an owner information page and they have a normally contact information page there. And the software also has a lot of permissions. So this person's got permission to my unit. This was permission with call. So I think the answer to that question is that not every community, but most communities would have the ability to capture that information in their management software. Ness, I want you to share the answer to question 3. So I think this may be an opportunity, ladies. We have a lot, only about a third of our communities are doing any sort of pre-contracting. The two biggies are probably landscaping and, damage remediation companies. Those would be two I would want to get high up in the queue. And there was one other thing that you had mentioned, I can't remember which of you, it doesn't matter, yesterday, about the other importance, especially now more than any time before, supply chain is such an issue in our life. And if you can pre-contract with a vendor, you're going to be on the upper end of that supply chain queue than being on the wrong end. And there may just simply only be so much supply or service available. And you 100% want to be in the priority on that.
James,
okay.
One thing that's important, I'm sorry, with the remediation. So a lot of these associations should have a restoration company that they've contracted with ahead of time, but they need to know that the costs are actually borne by the owners, and that's under the emergency powers. So specifically subsection J, which says mitigate further damage, injury, or now we've added contagion because of COVID, that the association can track for those services, but it's ultimately the owners who are liable monetarily for the dry in, dry out of their units. And I found over time that some associations believe that's a common expense. So speak to your association attorney about how you structure that contract with the restoration company.
Yeah, related to the vendor discussion, I think, again, related to supply chain, it used to be the storm's coming where you run out, and get lumber and tools and water and first aid. I can't emphasize enough how important that, if you haven't done that already, the time is, yesterday, because we've all seen even the best of times with perfect supply chain. Everything you need is now gone because someone got there before you. So
are you saying they should check the gas in their generator?
Yeah. Well, our best story is always the knowing how to get out of your garage with a garage door opener when there's no power. I can't tell you how many times we've had teammates not know that in advance. It's literally one of our checklist items now. But you mentioned videoing and taking photo of the community owned assets pre-storm. How important is that? I guess, Andrea, I'll start with you. And when should a community do it? And can you give us any kind of scope of what that should look like?
Absolutely. So I would say if it is a scheduled line item on your property insurance policy, it would be a great idea to have a time-stamped photo or video of it and have it in such a fashion that it's going to be, I would say do it now at the beginning of hurricane season, unless something drastic is going to change over the next 6 months. The reason why that's going to be so critical is when the carriers come out, in addition to the appraisal that's going to be on file, they're going to, if you've got a replacement cost policy, it's going to be a replacement cost of like, kind, and quality, most likely. So if you've got evidence of exactly, if you've got a wool carpet, and they're trying to come back in with a standard carpet, price per square foot, those are going to be things that are going to be critical to the associations to establishing what was present at the time of the storm, what was damaged. And that's more of a back end to assist with the adjusting, to make sure that the claim is going to be processed as fast and as timely as possible to make the associations whole.
Donna, any legal implications of having that captured?
No legal implications. I just think, to Andrea's point, that it may actually be a requirement under the policy, and it's certainly going to help facilitate your claim recovery. Some of my clients are actually renting drones to take those pictures. And the other thing I would say is associations really need to know ahead of time which owners have made owner upgrades, where it's going to be, if those, they've enclosed a balcony, they've built a tiki hut, and whatever it may be. Make sure you know which is which, because the owners are going to be responsible typically for any repair or replacement costs associated with those owner upgrades.
And it looked like you wanted to hop in there.
Real fast. So a lot of general liability policies now have exclusions under the liability policy for unmanned aircraft, which would include drones. So, maybe better if you can hire the adjusting firm who's got the coverage for their drone, only because if it falls out of the sky, the liability policy may not respond if it hits someone's car or someone's head.
That's a
strange new endorsement you're going to see on a lot of policies.
You were going to tell us some scary stories, but you're right. But this is where the role of an independent public adjuster comes in.
Exactly, and there are those firms out there that can assist, with the in advance of, not just the after the fact.
Interesting. It was funny. I think we may have had 100 questions submitted, and 4 or 5, which I thought was more than I would expect, addressed personal generators. And I'm pretty sure they meant in multifamily. Like, there's lots of single family homes that have generators beside their homes that don't really cause any risk to their neighbors or limited. Any thoughts, legal or insurance related, on generators in units, or often they're on the balcony, obviously, but I was surprised to see. I wasn't even going to put that in my content, but I addressed it because it came out of the questions. Is that just a no?
Is a no. Every set of documents has a nuisance provision. I've never seen a set of governing documents that didn't have a nuisance provision. And 9 times out of 10, that's going to reference flammable materials in the unit. These generators are run on gas, correct? So that seems to be flammable, not something you'd want your neighbors to have.
And would that have
talking about multifamily, not necessarily the whole house generators, or generators in a homeowners association with single family homes.
Agreed. Okay. One of the things I want to mention, we're going to talk about communications, but one of our best practices is make sure you do this complete pre-storm checklist. And then once the storm's passed, usually within 4 hours, you do a post-storm checklist. That's a management best practice, but I also think it has implications for both the legal and the insurance claim, because you're supporting, what took place before and what the condition was after. And to your point on video and pictures, it's so easy now to do. I mean, in the olden days, it wasn't, but now, literally we all have an iPhone and it is date stamped as soon as you do that. So I want to do poll question 4. Speaking of taking photos, let's put that up, Mariness. And while we're doing that, Donna, you brought up communications, and I just made some notes. I'm not so sure it's even necessarily legal or insurance as management. I say early and often, get that communication. We had a question that come up, are there checklists for the single family homeowners in an HOA? And there are lots, and we have those resources on our website. But especially people that are maybe out of town, they're not thinking hurricanes. They don't have June 1 put in their forehead like we all do in the management industry. But so what we're recommending, and especially because we may be without power, it's really good to have multiple ways to communicate. And this goes back to having a roster and having all the contact information and having a backup. But I mean, we can now text, we can now email, and now Castle and a lot of the management companies have an app where you can do notifications, even if you don't have power, you can still communicate. But the types of things that I wanted to highlight in this category were, one, sheltering. In other words, our residents need to know where to go if they can't stay in their home. That really is an important one to be communicated. And the other is timing. When are the elevators going to be shut down? When are the guards no longer going to be in the guardhouse? When will management leave? When will they come back? These are the types of things that, as part of our protocol, we get that information out so people aren't guessing. In high rises, they'll often, hold the elevator up at a higher floor so it doesn't get flooded. Comments, Andrea and then Donna, about the importance of communication from an insurance or legal perspective. It's obviously paramount from a management perspective. From
an insurance perspective, so that's going to go more to the defense at the time. So depending upon what the allegation may be, what it looked like, what the plan was, how it was instituted. I think a lot of it, there's, in my mind, originally goes, there's always got to be a little bit of wiggle room. So we think about something like Hurricane Michael when it came through. I think it went from like a tropical storm to a Cat 5 in 36 hours. Not everything was going to be done according to plan at that point in time, and the evacuations and everything that took place. But again, if you've got it, you follow it, and you put that in your file, if something does happen, that's a great document to take out and hand over to the insurance carrier for defense purposes.
I want to put up the results.
It becomes critical, James, when you've got board members who are dispersed. So in some of our larger hurricane events, you had board members who left the state altogether. Okay, when are they coming back? How do people reach them? Who's doing what? Who pays for what? If your management contract says that your manager can only spend up to $500 without board approval, that manager is going to need to be able to get in touch with the board immediately to at least pay to have the roof tarped, right? So these are the things you need to think about. This is why communication is so critical. And certainly for our boards, who sometimes are not the best at communicating with each other, for them to say, who's going to be doing what, where are you going? At least the board should have their own little communication channels set up as well, so they can answer these questions. And then, of course, several communication channels, as you suggested, James, in terms of where can people go? If they can't, websites are great, right, for this up to date information, but not everybody may have access to websites immediately. They may not have even charged their cell phone or their laptop, so they can't get that information. So the more channels you set up, the better.
You reminded me of the two other ones we get frustrated with when our property manager hasn't filled the tank of their car. We only say it 100 times or charge their phone. There's the results posted on the video and photos. So this is an opportunity. I'm glad we asked the question. I've just made a note for our own communities to of course make sure that's done. I want to move more specifically, Andrea, into the insurance market, but I had a question come in here. Is a current reserve study with photos an appropriate document for insurance purposes? Andrea, I'm going to send that to you, but we talked yesterday about whether a reserve study with inflation and what's happened in the marketplace is actually the relevant document anymore. So comments on the merits of using a reserve study as a support for insurance claims, and how current should they be? And have you been finding that reserve studies are kind of dated because of inflation?
I find that everything is dated because of inflation, even in 3 to 6 months. We're seeing it partially in the insurance industry right now with our primary carriers that are coming back and they're reinstituting co-insurance penalties because they're saying, even if this appraisal is 16 months old, there's no way you're rebuilding that at $105 a square foot.
Right.
And so they're saying, you're going to be penalized if you're underinsured unless you either go get a new appraisal now, basically, or agree to their minimum price per square foot on, a smaller frame building. They're wanting to see $133 a square foot from 105 on an appraisal that is 16 months old. So that right there tells you they're seeing a gap that's been created from supply issues and from inflation. To a reserve study specifically, the reserve studies that I've seen historically, and that doesn't take into consideration all of them, they have very select items that they're reserving for, but they're not necessarily as in depth as a full appraisal is going to be. Might say the roof and the painting and the windows if you're lucky, but somebody's got to get in there on the electrical and the plumbing and the drywall and the installation so that they can really get a full picture. If it's just for documentary purposes that they came in and that person 6 months ago took photos of the fitness room and they took photos of the library and they took photos of the pool deck, for documentation purposes, if they're stamped and dated in a reasonable amount of time, it may be sufficient. But having something more specific and more timely is probably going to be better for any association if you're in the position where you're fighting.
And the law requires an update on appraisals every 3 years, but if the association has made some significant alterations and improvements during that time, you're going to want to get an updated appraisal so you've got coverage for those alterations.
Yeah, and on that topic, Donna, we were all surprised that the legislature didn't mandate more specifically on reserves this past year, and I think they'll probably get it together next year. And so we need to, all of us, even for the communities that are waiving reserves or not reserving, I think that's coming, and it's going to be a big budget adjustment. So I know that's not related to hurricane or insurance specifically, but I want to move to the insurance market, Andrea, which I don't really want to talk about, but I really think we have to. And I thought a good way to start, Marinessa, is put up poll question 6. I know I'm skipping one here, but poll question 6, it's asking Andrea some information from our viewers about what they're experiencing out there. So the first question is, has your policy renewed in 2022? And really my intent with that one was, have you had a recent renewal? And then we had discussed how the insurance market is changing in terms of deductibles that are being offered. And then finally, we're trying to get a scope of how much insurance is going up. You probably know this, Andrea, but it's interesting to see what the audience. But can you explain to our audience, because I get a lot of questions about this, the difference between a deductible and a co-insurance, because it's got a big impact on what happens. But maybe just take a moment while they're answering that question and explain the difference.
Absolutely, of course. So co-insurance in property insurance is completely different than what we know and understanding co-insurance and health insurance. So where you have co-insurance is going to come into play is it is basically an agreement between you and the carrier that you are agreeing that all times, and including the time of loss, that building is being appraised to the amount that you agree. So if you've got a co-insurance agreement, I'll call it a penalty, co-insurance penalty of 100%, for example, you're saying that at the time of loss, when they come out and they appraise the value of the building as it stands, or stood, I should say, the day before the loss, that you bought dollar for dollar. So if you have, on the day of loss, they come out and they say, this is a $10 million building, and you bought $8 million of coverage. And they say, all right, now you've got, maybe it's even a small loss. Maybe you only have $2 million worth of loss, and you had a 1% deductible. Before they even get into the deductible application, they're going to do a should have had over a had formula. So you should have had $10 million of coverage. You only had $8 million of coverage. You were 20% underinsured. So after we apply the deductible, we are going to subtract 20% from the loss because you bought 20% less insurance than you should have purchased.
And this is so important because we all want to keep our insurance premiums down. You know, you could err on the side of underinsuring, thinking it's going to save premium, which it does, but it's going to hurt afterwards.
They don't
Correct.
apply that formula, Andrea, if the insurance company is not offering that coverage, correct?
So if you have a different valuation, so if you have agreed value, or it says co-insurance nil, or it says blanket, then you don't have to go through the co-insurance penalty or the co-insurance agreement. Citizens, you're 99% likely to have a co-insurance agreement on there. Basically, 2013 is when the market originally started to come down in pricing and the terms started to get much better. And so we saw a lot of agreed value. Hey, listen, if you tell us the building's worth $8 million and it's a total loss and you need $10 million to put it back up, we're only going to give you the $8 million you purchased, but we're not going to penalize you for having not purchased enough. That's great. We're seeing in addition to rate increases, in addition to forced deductible increases, we are seeing the reinstitution of coinsurance.
Interesting. We have, let's show the results because it's related to the question that's come in. So here we are. Has your insurance policy renewed? Yes. Did you renewal have a higher storm deductible? Yes. This is probably what you're, and then look at these increases. It's just, it's crazy. So the question that's just come through is, I'm interested in knowing how other boards intend to pay for the increase in insurance premiums. And I'm gonna marry that question with one. I'm just gonna jump down again because I think it's relevant. So whether it's deductible or whether it's co-insurance, if there's something that needs to be paid by the association, they have to have the cash. So there's two obligations here that need to be met by an association. One is we budgeted $100,000 for insurance and it's 150. How do we pay the difference? Because we didn't budget for it. And two is, to the extent we have a claim and a deductible and or co-insurance, how do we fund that? I guess, Andrea, firstly, what's your experience? How are associations funding that, and what is your recommendation?
So I've had a lot of 3 renewal meetings so for our renewal cycle. So there's the forewarning. Hey, this is what we're seeing now in the market versus what we saw in September when we set the budget. And then we're having the actual renewal meeting when the terms come in and the decisions are being made. And then I'm usually attending a special assessment meeting after that to explain to the community as a whole what the market has done, why there is such an increase, why the premium came in as it was, and the associations are then special assessing. Other associations are financing maybe now where they haven't had to finance in the past, and they just know that, you know, if the policy renewed in April, okay, we've got enough money if we finance through December, but when we do the new budget for 23, that insurance budget might be double to offset some of the expenses that they're incurring now.
Yeah, in fact, Mariness, the last question I had for the day, and let's get it up, is number 5. And the question is, how is your community planning on meeting any requirement for cash that's related to either insurance or storm? Donna, thoughts? What do? We budgeted, we under budgeted insurance, and frankly, we, as the management company, we know this has happened because we actually call our insurance agent partners and say, help us budget. And this would have been last August. And now, of course, it's, you know, May and we have our renewal and it's a different world. Donna, any thoughts on what you're seeing your clients do to address this?
Well, some fortunate communities actually have reserves set up for premiums, deductibles, uninsured losses. But for those that don't, just what Andrea said, a line of credit can become a crucial lifeline when you have these kind of increases. You know, the other thing is if you do have abundant reserves, particularly either a pooled reserve account or straight line, you can get a membership vote to use those reserve funds for non-reserve purposes. Boards cannot do this by board vote alone, but your members, a majority of your members can vote to say, okay, we've got abundant money in the roof reserve. We need to pay this insurance premium. We're going to vote and allow the board to use the funds in the roof or the painting or the paving to pay this. And again, a lot are also amending now midstream. They're going back and they're having to readjust their budgets because they just weren't expecting this kind of increase.
I want to pick up on one of the comments there, and that is basically an association is a corporation. It has a balance sheet, and one of those elements is cash. And that cash could be operating cash, it could be surplus operating cash, it could be reserves. But the association does have a mechanism, the authority with a vote, depending on the documents, to use that cash. So I'm saying this, it's good to have cash. The communities that we have that have low operating costs and no or low reserves, their ability to absorb a shock is so low. And I think, as I mentioned before, I think this is going to be legislated, but even from just running your community, you need to have cash. Let's share the results, Mariness, of what people plan for this currently. So I've got 26% are rich, they got lots of money in the bank. 13% line of credit. I'm going to come back to that. And then the rest either don't know or we don't have a plan. I really think the line of credit is a great defense mechanism. It's relatively inexpensive. There is a setup fee. There is an annual modest renewal fee, but you don't pay for the money if you don't borrow it. So, and I think people, the general public anyways, that would be surprised at how happy banks are to lend to community associations, because their security is the assignment of the assessment powers of the association. So I'm actually a bit surprised that we're only at 13%, Donna, on line of credit. I thought that would be a higher number.
Banks are less, you're right, banks have money to lend, and traditionally associations have been great customers for banks because they don't go out of business. Good times, bad times, they can't just roll up the sidewalks and decide that, they're not going to be there anymore. They have to continue. But, right now in our post-Surfside landscape, banks are really, certain communities, coastal older communities, unless those communities can prove that they have full reserves, that they've been on top of their maintenance, that they have low collection, low delinquency rates, low transiency rates, those communities may find it very difficult to find financing right now. The other thing I would say, and you are absolutely correct, James, that cash is king, and those communities that do have surplus are the ones that are going to, ride these waves the easiest. That means looking at your collection policy. If you've been very laissez-faire about, getting in your assessments, those assessments fund your essential services, including paying for insurance. So if you've, been pretty lax about that, and you have found people who haven't paid for months or years, now's the time to start tightening up those collection policies.
Yeah, it says share results. Are we sharing those results right now? Okay, good. You can take that off screen. I'm really struck, Andrea, how things can change a lot in the insurance world in 12 months. Talk to me about your advice to your clients about actually reading and understanding the policy, because I think there's a tendency, and I'd be guilty of this as a homeowner. Did I really read my policy, and do I really know what's in there, especially because it's changing? Maybe share some thoughts on, obviously, should we read it, but who should read it, and what should we be looking for in these policies?
Absolutely. So in a property policy, first they want to understand what type of coverage they have and how their deductibles apply and when they apply. Because you could say, well, two different communities and they both say, well, we have a 5% deductible. So then the next question is it a 5% wind deductible? That's no matter how the wind blows, an afternoon thunderstorm to a hurricane, the 5% is the deductible. Is it 5% only when it becomes a named storm? Or is it only a 5% once it becomes a hurricane? So that's going to be critical. The next is going to be understanding, is it 5% of a single building and just the building that's damaged? And then you have other policies that are what we call like a location or a campus deductible. So if you have, 5 buildings or maybe even just 3 towers and a lot of ancillary property, they might add all of that up together. And so if you've got $100 million of total insured value, is it 5% of $100 million? Or is it 5% of each scheduled item? Because if it's, just the pool cabana that's damaged in the hurricane, 5% of a $300,000 pool cabana is going to be a lot more digestible than 5% of $100 million for deductible.
This is so important. I mean, this could change your world.
Absolutely, it's critical. And when you're comparing them, this is, hindsight if you haven't had your renewal, but my book of business and your poll is very similar. About 70% of my book has already renewed for the whole year. We have these discussions in advance to decide, yes, there's a $30,000, $40,000 premium savings, but you have a millions of dollars difference in application of deductible. So that can make or break a policy. Then you need to know some policies have wind-driven rain, others do not. So if the building itself is undamaged, but it's 180 mile an hour winds that force the water in through the sliders on the 12th floor, and that water just finds its way all the way down, you now have a wind-driven rain claim. Not all policies have coverage for it. If they do, they're usually sublimited, maybe $100,000, $250,000. The other thing you want to look for is you can have a 5% deductible. It can be 5% per building, but you can have a minimum per occurrence. So if you've got a $300,000 cabana and you've got 5%, you might still have a $100,000 minimum per occurrence. And if that's the only thing that was damaged, even if you've got $50,000 worth of damage, which exceeds the 5% of 300,000, you didn't hit your minimum. So again, it's critical to understand how it's all going to apply. So it's all spelled out in front of you. So yes, we have a claim. Yes, we need to report it. The last thing I would put on there is if you have an aggregate calendar year deductible. So you may have one storm that comes through, you've got a 5% deductible and you only have 2% of damage, but it aggregates throughout the calendar year, January through December 31st, you still need the carrier to be aware of the 2% of damage so that if another storm comes by and it does 5% of damage, you want to get credit for the 2% of the 5 you've already met. So it's a lot more complicated than we might imagine.
And it's really important that your coverage complies with what your governing document insurance provision requires, because some declarations will require specifically flood coverage, will require law and ordinance. Some even put a limit on the deductible. Some even outline the type of insurance company, the rating for the insurance company you must do business with. So arguably a board could be in breach of its fiduciary duty if it's making coverage decisions and obtaining coverage that does not comply with the provisions in the governing documents.
This is we only got a minute left in our hour, but this is a really powerful way to end, in that not only should you read your insurance policy and understand it as a board member, but you better make sure that your insurance agent, has that document and is matching the policy to the requirements of the document. Because Donna, everyone's different. Every set of documents, literally, in the states are different. So, okay, well, this is really good. And by the way, I think I see 2 more deep dives we'll have to do in a subsequent. We really didn't address all the different coverages that an association has, Andrea. So we're going to have to do that. And Donna, I'd really like to go post-storm and what a public adjuster role is. But I'm very happy with what we shared today in terms of, the hurricane season's coming. These are the questions you need to ask yourself. Andrea, any last minute thoughts on what we didn't say that our audience wants to hear?
No, I think it's really what you and Donna covered. Knowledge is going to be power at the time of storm. Knowing what you have, knowing what you don't have, knowing who's there, knowing what the plan is. I think you both covered that excellently, and that's going to be critical in the event of a storm.
Donna, as always, you get the last word.
Oh boy, I would just say, listen, if you're sitting on a board, you have fiduciary obligations. Reach out to legal counsel, figure out what you need to do in terms of preparation, and also how you need to handle the post-storm claim process, because that's really where your fiduciary obligations will come into play.
Excellent. Okay, so a couple things. Number one, we do record this. This will be up on our website when, Kara, by the end of the day? By the end of the day. 2, if you have any questions we haven't answered, info@castgroup.com. And 3, you can go to our residence center on our website and get basically a link to, I think, most of your questions. And if it's not there, let us know. So Andrea, Donna, so grateful, appreciative of you sharing all of your brilliance. And I know our audience is too. So have a great day. And to the audience, let's have a slow hurricane season, a safe one, and let's get ready. Thanks, everybody.
Thanks, everyone.